We've got some shocking data in our NWA Market Report recapping the month of May. Our average sale prices broke last summer's all-time record of $413,000 and shot all the way up to $437,000. And when I pulled the MLS data earlier this week, like I said, I was truly shocked because not only did it crush that previous record by over 5%, but it soared right on past last month's sales prices by 9%. So let's back up and show you how we got there. As we come into our summer selling season, we're still seeing strong buyer demand and lower available inventory. As you can see, we have fewer actives than pendings or under contract in our market right now. And given the rate of selling in our market, that gives us 3.87 months of supply. So we are firmly under 4 months of supply, which means we are officially in a seller's market. Our closed transaction numbers jumped quite a bit from April into May, as predicted, because all of those pending homes that were building up throughout our spring market are now starting to close. So in this chart here, you can also see the active and pending number starting to climb just slightly above our peak level last year. And that means we are going to have a few more homes in the market this year than we had last year. However, I still expect the number of closings to climb as more new construction homes are completed and closed out this summer. Also, most homes are finding a buyer fairly quickly right now, especially at the mid to lower price points. We're starting to see multiple offer situations coming back in full force. And all this is keeping our median days on market relatively low, with our main number coming in at 60 days on the market. And this is similar to the levels that we saw in 2019 and 2020, but it's still a little higher than what we saw in 2021 and 22. Then it was kind of hovering around 40 days on market, but that was a frenzy. Now, I've been predicting Northwest Arkansas home prices to break records and go well above $400,000 this summer, but even I was surprised by this huge increase that we saw in May. I mean, I've never seen the average price point jump by 9% in 1 month. It's really unprecedented in our market. So back in April, the average price was $402,000, which kept pace. That was, the month before that, March, was right there too. But then we jumped all the way up to $437,000. And as you can see, the median price also jumped up quite a bit, from $339 all the way up to $363. And this is also the highest median price on record, which really clobbered last summer's previous record of $344,000. Now, I expect this pricing trend to continue, with prices rising throughout the next several months, although, of course, some slight variations and fluctuations are perfectly normal. With this break to the high side, this right here, you see, we had been trending sideways for almost a year now. And the question is, when you're trending sideways, is it going to break to the downside or is it going to break to the upside? Well, this break to the upside right here, to the high side, it means, this trend that we've had over the last year is now giving way to a higher level of home prices across our region. So I'd say these high prices that we've been maintaining since last summer are now probably going to be acting as a floor for our winter down cycle. So our prices are probably going to continue to go up for a little ways, and then in the winter they might down cycle, but they're probably not going to go back below this level, which means these prices around $400,000 are going to be pretty solid in our market, or even higher going forward. And as we discussed last time, after a full year of mortgage rates over 5%, buyers are finally settling into this new reality, and they're going ahead with their purchases. Despite the Federal Reserve continuing to raise its federal funds rate for banks over the last several months, it may be pausing on that for now, but mortgage rates actually they've been hovering below their peak of, around 7%. They've actually come down quite a bit, and now they're back up to about 6.8, 6.7 percent average right now on the 30-year mortgage. Now, our average prices per square foot climbed this month with those average prices, and we're now generally around $200 a square foot throughout the region. Let's take a look at this. So Benton County is at $202 a square foot. Washington County is at $197, $5 lower on average. Now, Bentonville was at $218 a square foot, and in Fayetteville, $203 a square foot. So here's what all this means for you. Our Northwest Arkansas real estate market, it's heading into a big summer season. So right now, again, there's an opportunity, especially for sellers, since prices are on the rise again. So if you've been thinking about selling, now would be a fantastic time to consider putting real plans in place to cash out on that equity. And if you've been thinking you'll wait till next year or maybe even later to make your move, I'd like to share a strategy with you to potentially save $20,000 or $30,000 and potentially hundreds of dollars off your monthly bills, depending on the equity position you have in your current home. So would that be a conversation worth having? If so, leave me a message below, a message or a comment, and we'll start a chat. Now, buyers will soon be facing even more challenges in this market. So we're already seeing multiple offers back in the norm, okay? In fact, one of my recent listings actually landed at 4% over list price with very favorable terms to the seller. Now, it's odd to see so much competition even with these higher interest rates, but I mean, that's just the current reality of our market. So if mortgage interest rates fall in the future, there will be an even bigger flood of buyers coming into the market and competing for the few homes that we have available. And in that scenario, that means prices are going to go even higher. So locking in a good price right now may be a really smart bet. And if interest rates happen to go lower in the future, of course, you can always refinance at that time. It's always a possibility. Now, our lender partners can fill you in on all your options, of course, including mortgage programs that may allow you to actually buy down that interest rate. Now, especially if you're selling one home and buying the next home and you have a good chunk of equity in there, maybe instead of putting all that equity as a down payment on your next home, you think about buying down the interest rate. There is a line where financially it makes more sense to do one or the other. And again, this is a conversation that you need to have with one of our great local lenders. I can give you recommendations if you'd like. Well, I hope this information was helpful, and I hope it helps you make your buying, selling, and investing decisions. And if you'd like to go more in depth with me, I'd love to do that. And I invite you to grab a free strategy session on my calendar so we can talk about your goals and put a good plan in place to get you there. So just message me or comment below and we'll make it happen. All right, as always, this has been your monthly market update. I'm Coley Bailey with the Lone Rock Home Team at Fathom Realty, and I'll catch you on the next one.